Hello, everyone. You are welcome once again. Today is yet another video tutorial, very important to your trading journey. So, somebody asked me, as a beginner, where do I start from? What are the things I should focus on? So today, I want to take a little time to tell you, from my perspective, some few things you have to focus on as a beginner, right? So let's start straight away. All right. So, you cannot, of course, trade without a strategy. All right. So every trader has a strategy. So your strategy is the kind of conditions you want to see in the market and what will trigger your entries. So maybe you want to see A, B, C, D happening on the chart, and then you want to see price return to a certain key level, and you are going to take your trades from there. All right. So like what we already know, some people are break and retest traders, some are supply and demand traders, some are SMC, some are ICT, some other do chart patterns, trend lines, and all those things. So regardless of your strategy, these things that I'm about to discuss is very, very important to your trading journey as a beginner. So number one, focus on understanding your strategy. All right. Understanding is key in everything. Whatever you don't understand, you cannot benefit from. You end up doing it anyhow. All right. And you weary yourself out and even abort it, the process. So focus on understanding your strategy. So the focus can be watching more video tutorials. If you signed up for mentorship, make sure that you are asking relevant questions. In our day, most of the mentorship videos comes with recorded, mentorship programs come with recorded videos or lessons. So even if you have to revisit those videos and watch them over and over again until you are much more familiar with the strategy, you have to go ahead and do that. And also, understanding your strategy also means you have to understand the rules that govern the strategy. All right. Those that do break and retest, one of your simple rules may be, first, there must be a break of either support or resistance. All right. And then after the break, you are not going to FOMO. You are not going to rush into entering. What you are going to do is to wait for market to return to the previous support or resistance that was broken for it to be retested. So after the retest is successful, you may go for risk entry or confirmation entry, depending on whichever strategy that you are using. So you have to have all these things at the back of your mind. And I would advise that if possible, you have to write these rules down, write them on a paper, paste it on the wall where you normally sit to do your analysis. You can as well memorize them. When you use it over time, it sticks into memory. So you, as a beginner, just write them somewhere. So you know that these are the checkpoints that I want to see in order for me to take an action on the market. Right? So understanding the rules or your strategy is very critical. Now, as a beginner, you have to also focus on market structure. Your focus should be on market structure. All right. So at any point in time, you should know which market you are trading in, whether you are in a bullish market or you are in a bearish market, or price is just dancing around, consolidating, right? So market structure is very important. But of course, what complements market structure is the third point I'm about to mention, which is top-down analysis and time frame alignment. I'll put the two together, though they are a bit distinct, but they are similar. All right. So top-down analysis, moving from your higher time frame to your lower time frame. So you want to understand structure on each of the time frames. So your top-down analysis is to help you to understand the structure on each of the time frames. And then your alignment, time frame alignment, you see, when you see a higher time frame and a medium time frame or a smaller time frame, or some people even mention micro time frame. The smaller time frame is just a small picture of the bigger time frame. So in the end, the smaller time frame should fit into the bigger time frame. And when you see a bigger time frame, the opposite is true here. When you see a bigger time frame, you can break it down into smaller time frames, smaller pictures, so that you'll be able to understand the market conditions. So, for instance, if your higher time frame is the daily time frame, all right, the daily time frame. After your analysis and you discover that the daily time frame is what? Bullish, you will definitely move to a lower time frame or a medium time frame, which is going to be, some people move to the 4-hour. And you want to know the 4-hour structure also, whether it conforms to the daily structure. And I think this is where the confusion comes for many beginners, because I also suffered the same thing. So when the 4-hour is bearish, it means that you are seeing two different things here, and it cannot be right. So once the daily is bullish, all the other time frames from the daily downwards should align with the daily time frame direction. So if the 4-hour is bearish and you go to 1 hour and it is also bearish, what this is telling you is that although the daily is bullish, the 4-hour and the 1 hour is bearish, meaning that it has not yet aligned to the direction of the daily time frame. So what do? You wait for the alignment. You wait for the alignment. That is if you want to take buy trades. You wait for the alignment. So let's just say this is your daily time frame, all right, which is bullish. Then you see markets coming down. This is your daily. Now on your 4-hour, you may see something like this, where it may be a break of structure here, which means that even though the daily is bullish, but the 4-hour is still bearish. So in order for the 4-hour to follow the daily time frame order flow, you wait for the last high here to be broken, so that you know that now the 4-hour is switching bullish in the direction of the daily time frame. All right, so that you can be trading in that order. So I'm not teaching top-down analysis, but I'm just telling you as a beginner what you need to focus on. But just in case you have lapses, you feel like getting back to us, we are ready to help you to connect the dots so that your trading journey can be much more successful. So let's move to the next. So from your top-down analysis and time frame alignment, you have to also get to know liquidity concepts. As a beginner, direction very right, but what price will do or market will do is that it will just take me out. Maybe I just entered here. It will take me out, and right after you see it moving in my direction, right? So what I got to know is that I learned a strategy which did not consider liquidity, all right, which was the break and retest. I don't think break and retest traders that I knew of, or there's none that I know of as at now, perhaps I'm not researching, that considers liquidity when they take their trades. And that is where I think that there is a problem, because liquidity is much more important in whatever strategy you are doing. All right, so I'm currently working on how to inculcate liquidity into the break and retest strategy and share with you as a course. If you are happy with that, just comment in the comment section. I'm happy about it. I can't wait. Just give me a nice comment. Very soon you're going to hear from me. So liquidity concepts are very important. Liquidity simply is orders, all right? Orders in the market. All the types of orders are liquidity. Your buy limit, your sell limit, your sell stop, your stop loss, your take profit, all those orders are liquidity. But how do you know which one the market will use to induce people and then later move where it wants to move, unless you study your strategy and you get mentorship. All right. So liquidity concepts cannot be overlooked in this business, because liquidity also helps order pairing. All right. Of course, you may be taking a bullish trade, but whatever it is, somebody will have to sell to you before you buy. You cannot sell something nobody's giving to you, or you cannot buy something nobody is selling. So once you are buying, it means you are buying from somebody, right? So you are either buying somebody's order, stop loss order, sell limit order, buy limit order, buy stop order, sell stop order. It's like that. All right. So make sure you study liquidity concepts and then work on your entry and exits. Here, FOMO really cause a lot of beginners fear of missing out. Price may break a level, is returning to their POI, or point of interest, or area of value, or demand zone, or supply zone, but they are impatient to wait. You realize that price will not tap the order block, it will not tap the supply zone, it will not tap the demand zone, but it will start moving away, and they are like, price is leaving me behind. They will jump in, and then they will just be caught up in the middle of the ocean where a whale will swallow them. So work on your entries, and as well, you cannot be in the market forever. You're going to exit at some point. So you have to know which areas in the market you are supposed to exit. And then lastly, trade management, very crucial. Trade management refers to after you have entered your trade, how do you manage the trade? At some point, you have to be taking partials. At some point, you have to move your stop loss to break even. At some point, maybe you have to add a position and all that. So that is also very crucial. Some people after entry will not add any position. That is to them. Others will also want to scale in. All right, they want to add more positions because price has or market has presented another good opportunity. So trade management is also crucial as a beginner. If you like the video, make sure that you hit the thumbs up and the notification button, subscribe to the channel, and you are going to enjoy a lot more of this. This is where I'll end. This has been Easy Forex. Thank you so much. See you later.